And we're going to be going over what's happening in the housing market. I know that there's been a lot of craziness that's been going on the last few weeks, and I've been getting a lot of calls and questions about what's happening in the housing market. So we really want to get your input and answer your questions. And I am going to go through a few things just to kind of show you where the housing market is today, because really the only thing we can do is look at it day by day, and that's what we're doing, is looking at the data, seeing how things are changing, and we can only determine how things are going to go today. But I'm going to talk about some projections. I also have Ashley Shipley here on the call. She is a lender with Veritas Mortgage. There have been a lot of changes in the mortgage industry, and a lot of changes with lending and funding and things like that, and how things are working. So she's going to help us through this process to kind of explain how things are going on that end as well. So I'm going to go ahead and share my screen, and we're going to go over some statistics just to show you kind of a little bit of a snapshot of where the market's at right now. So give me one moment. So Utah Real Estate is the Utah MLS, the multiple listing service, is what we use here. And they're keeping us up to date on a daily basis. So can everybody see my screen right now? Thumbs up. Okay. So we've got the last 7 days of active residential listings. So if you look here, the top line is 2019, the bottom line is 2020. We're seeing trends pretty on par with last year. If you scroll down, and if anybody wants this data, I will be happy to send that to them. So just write a comment with your email address. I'll send that over to you. So we're looking at active listings per day. So this is over the last 4 years. So we're this black line here. So again, we are still trending pretty normal. So this is what I wanted to show you right here. So in 2020, even in January, listing inventory was down. So I don't know if you've looked at the market at all, or you have anyone you know that's been looking. That this is the reason right here why it's been so hard to get into homes, why we've had so many multiple offer situations. You look at the 2019 trend, it was about 2,000 more homes were on the market, but 2018 was another one of those years where it was very limited inventory. So even as far as March goes, we had about the same amount of actives as we had in 2018, nothing that had been sharply increased at all, or decreased from what it was trending before. Does this make sense to everybody? Okay. Under contract listings is really what we want to look at, though, because we want to understand not only what is active on the market, but how are things moving? Are things still going under contract? So the black line over here, 2020, we're seeing it is still, there's still a lot of under contracts. Things are still, we're still moving in March, and they're still moving in April. So right now we have a little over 6,800 all in Utah. This right in Salt Lake County right now, we've got 2,000 homes that are under contract. Last year at this time, it was about 2,500, but we had a lot more inventory last year. So this is still pretty normal at this time of year. The average days on market, or the average number of contracts that are under contract each day, this is just a little bit of a different view here. But we've got the average number of under contract residential listings per day, and that is in March. It's a little bit higher than it was in last year at this time. So basically, in looking at this data, I mean, as of a snapshot of today, things are still moving, they're still active, but there's a lot of unknown about what's going to happen in the next 3 to 6 months. So here, what does that mean? So right now we are seeing quite a few, the job loss statistics are going up quite a bit. I'm sure everybody here knows somebody that has been affected by a furlough or a job loss. What the hope is right now, and what governments are doing, is providing loans, bridge loans, to help people keep their payrolls up. So once they've figured out how to manage the COVID-19 situation, we're kind of like this. You see the stock market, it dipped down. What we want to see is a V. Like, we want to see the dip down and then the come back up, and a quick rally. I do think the government is doing as much as they can, and they will hopefully be doing more to keep businesses afloat during this time. So the best case scenario is that everybody's back to work in a few months. Of course, we don't know what's going to happen. And Ashley, I would love for you to give us a little bit of insight on kind of where the mortgage market is right now, how things are trending. I know a lot of people have seen that interest rates are low right now. The federal interest rate is low. So how is that affecting the mortgage industry and people's ability to be able to get loans?
Yeah. So the Fed rate does not directly mortgage rates because the Fed rate changes maybe 8 times a year versus where you've got mortgage-backed securities trade thousands of times a day. So the Fed rate is not truly affecting the mortgage rates. Maybe in the long run we could see that. The bigger thing is that the government is buying mortgage-backed securities, so they're basically putting their money in the wrong place. The part of the mortgage world that is struggling are the servicers. So the people who make money by taking your money each month and then they pay their property taxes and things like that. So if you pay Wells Fargo is your servicer, they make a little bit of money by paying your mortgage each month. Well, everyone and their dog's being told you don't need to make your payment, which is incorrect information. If you can make your payment, make your payment. Because what will happen is those servicers can't do their part to pay the investors. So everything kind of collapses. So we want to protect the mortgage market and not have another crash or not have any other issues. And there's a lot of unknowns right now and a lot of ups and downs as far as rates are concerned. I mean, I've seen it swing as much as 1% in a day. So maybe the market opens and the rate's 3.5 and by noon it's 4.5. That's crazy.
So let me ask you this: with somebody that is in the market right now to buy a house, should they be holding off? You said there's swings up and down. That 1%, is that like something you can hold off and lock the interest rate a little bit later? Is that what you're doing with your clients?
So what I'm doing to kind of help my clients, first and foremost, I think your best bet is working with a lender versus a bank. So Veritas has their own money, so we can keep it in-house if we need to, which helps you close the loan if there's an issue or guideline change or something like that. And then 2, we have the ability, once you go under contract, to lock your loan up to 3 days before closing. So it's just a matter of waiting until it swings back down, which it does. So for instance, the last 3 weeks, Monday morning at 7:30 rates have been the best.
Okay.
Don't know why. But they're still historically better than I've ever seen. December of 2018, I call them unicorn clients with extremely high credit scores, good down payments, etc. We're locking at 5%, between 4.5% and 5%. Those same people could lock at 3.5%. So, and the swing is still like between 3% and 4%. That's still an incredibly good interest rate. And if you have a consistent good job, this might be a really good opportunity to get into a home without all of the competition. Other people don't have that opportunity. So I think that it's a chance to get a house when you might not be able to and still lock in that amazing rate and protect yourself long term. So
that's really helpful information. I got a question this morning, somebody who's looking to buy a house in the next 6 months and was wondering what they should do. My opinion is that the interest rates are still really good, and that the market has the potential to actually slow down a bit, which could be a really good opportunity for buyers. But when I say slow down, I like to give a caveat with, we've been having 10% increases year over year for the last 5 years. It's been very crazy. So if the Utah market slows down, that doesn't mean we're experiencing in 2008. That means we might just come down to a slower growth, that we might come down to a more normal market. Maybe we flatten out for a little bit, but that doesn't automatically mean that prices are dropping. We definitely have opportunity to balance ourselves out between buyers and sellers and give buyers more opportunity, but that absolutely does not mean that it's a time that it's going to harm sellers. It just creates more balance in the market. That's where I'm feeling it. Would you say a similar thing?
I completely agree. So the Utah market is expected to still grow over the next 10 years. There's such an influx of jobs here that, I mean, you see it. Go down the highway, go like Queen of the Mountain, and you see all those new buildings going up. That's jobs coming in. COVID-19 is not going to be a thing forever.
Yeah.
Hopefully sooner rather than later. But I think the biggest thing is if you are looking to buy, improve your situation, whatever, every one of us needs a roof over our heads and somewhere to call home. And if you are able to lock in a rate and lock in a price and control your housing payment over the next 30 years, that's huge. And even people in 2008 that bought at the worst possible time, those people have equity and have made money on their house. Real estate in the long run is always a good investment, in my opinion.
I agree. And it's funny, I have a lot of clients over the past several years who've been asking when, should I hold off and, trying to time the market. And I've asked my investment advisor, what should I do? I want to time the market. He's like, you really can't, because you don't really know what's going to happen. And I feel like real estate is a lot of the same way. Now, of course, there's a lot of uncertainty right now, but like Ashley was saying, depending on your circumstances, if you need to move and you're wanting to get into a house, if you're not thinking about this as a flip opportunity where you're going to live here for a year and move next year, I never recommend that. I always tell people to give yourself at least 3 to 5 years to be in a home. And even if you have to move at that point, we can talk about potential for turning into an investment property or something until the market improves. So there's always options out there. But the one thing we don't know is, if the housing market is going to keep going up and what interest rates will do, because if they jump up permanently to about a 5-6%, that kills affordability for a lot of people who can still get into things now. And honestly, I do like to talk to people one-on-one about their specific circumstances. So I say, take this advice, but talk to me or talk to Ashley to really see what makes sense for your situation. Now, as far as sellers go, I'm telling people right now to list their homes. Like I said, there is some uncertainty, right? We don't know exactly what's going to happen in the next 3 to 6 months. So I can tell you the market is still moving. We are still getting everything that we put on, we've gotten into a contract within a week. We have 3 listings coming on next week, and I'm very positive about those being able to move quickly as well. And I don't think it's worth sitting on or holding or waiting. I think it's definitely worth putting on the market and trying to get it on as soon as you can. And we have some systems right now that we're using to help people address that. Any thoughts that you have, Ashley?
For sellers?
Yes.
Sell. So you've got to be smart. You've got to follow the guidelines that are being laid out by the government as far as like social distancing, keeping yourself clean, But again, this is an opportunity. And if you choose to look at it like that, you could do something very good for you and your family. Don't let it scare you away. This is a short-term thing right now, and a mortgage is more of a long-term commitment. And if you've already been thinking about it, definitely talk to someone one-on-one about your situation, but I haven't seen it be a negative. I haven't seen any purchases slow down. If anything, the people who were dying to buy in December and January that kept getting bid out finally had their chance and are finally buying homes without being inflated and crazy. So
I want to tell you kind of one thing I'm doing right now. We are doing virtual showings for all of our buyers, so if they want to. So I actually am meeting at a house doing a Skype appointment. My clients are immune compromised. We don't want to put them in a bad situation, so we're actually heading to the house. We're gonna do Skype, show them the house inside, and we're taking a lot of precautions. So we always have people wear gloves, hand sanitizer, and I open all the doors and turn on all the lights and make sure that they're not having to touch anything. On the flip side, with our sellers, we are doing what's called a Matterport tour. So basically what this is a 3D rendering of your home. So you can go room by room and really get a feel for how the home looks. Now, I do think it's important that a buyer do come and see the house in person at some point. but this can really narrow down the amount of people that are really interested in your house. So people that really love it are going to make the appointment rather than having too many people through your home. So we want to cut down on the amount of people that are being exposed. Obviously, it's very, very important to us that we are having safety measures in place, and that is all across the board with all the realtors that we work with. We do provide hand sanitizer and gloves, and we ask that only the agents are touching anything in the house, that no buyers or sellers are around touching things. We ask people leave their children at home if they can, so there aren't a lot of germs being spread. And another thing, yeah.
I was gonna say, even in lending, I don't go to my closings. So I'll try and do like a FaceTime, but the title companies that I'm working with are crazy strict. They're like, only the buyer, only the signing people are in the office, or they go to their house and they're signing on the porch.
Yeah.
I've done a few, and so the professionals are being professional, and we're protecting our people. And as long as you have a good team, you're gonna be good.
Now, one question sorry, what were you saying?
I was just going to say, talking about that, if you wanted to show on our new website, the virtual safety options.
That's a really good idea. We do have, hold on one second if I can share my screen again. So on our website, we have a new section that is, it is all of the safety things that we're taking into place right now. So a lot of this is just virtual selling and buying. One thing I wanted to note, and a question that I got, is they have put a stay-in-place order in Salt Lake County. What does that mean for real estate? So fortunately, this state is still allowing real estate agents to work and transactions to move forward. In other states, that is not the case in every state.
Yeah.
So
in Utah, real estate has been deemed an essential business. So we're allowed to continue operating as normal with all the precautions in place.
Exactly. And I mean, I just went to a closing and my title, well, actually virtually, I was Skyped in. So I went to that closing virtually, and then the buyer or the seller and the title agent, she was wearing a mask and gloves. And like you said, all the precautions are being taken because obviously we are working really hard to slow the curve, and we understand that there's a lot of health and safety issues that are that we need to address right now. So this page here just talks about it's emilyhayeshomes.com/safety. So it really goes over the virtual buyer consultations, digital pre-approvals. You do not have to meet with your lender in person. We do virtual open houses, virtual showings, virtual listing consultations. Everything we could do before, we can do now. We can just do it virtually. And that has been a huge thing for us. And like I talked about those Matterport 3D tours, I'm just gonna pull up. Todd, do you have the tour that we can show them from our other listing that we just put up?
Yes.
Okay. I'm gonna have him send me that link so we can show you that. So let me ask, does anybody have any specific questions right now that I know there's a few people on this call. What made you want to join today?
So Emily?
Yeah.
If you want to go just back to your homepage. And then scroll down.
Oh, okay. So this is what a Matterport tour is here. Sorry, this is how we have our listings up. So we have a special listing page for each one. But I'm gonna click here, and this is where you get to do that 3D tour. So it's pretty slick. It actually, you can go through and look at every single section of the home, basically go into the kitchen, walk up the stairs. It is super cool, and this is something that we do for all of our listings now during COVID-19. So
Emily, Mick just asked a question.
Yes. Oh, okay. What are we forecasting home values for this year and next year? So I'm not sure what's going to happen this year. Like I said, I'm hoping it's that V where we have a quick recovery. Everybody's able to keep their jobs. The things that could affect that, if people lose their jobs and they can't pay their mortgages, what happens at that point? we could see an uptick in foreclosures, which would be an increased amount of inventory. I don't foresee huge price drops, but what I could foresee is a stagnation. Maybe there isn't as much growth this year. There could be a little dip in prices. If, worst case scenario, people, like, the economy isn't going to recover as quickly and it's a little bit slower. The things that I can say is Utah does have, the jobs that are in Utah are jobs that, it's not like Las Vegas where it's mostly service industry jobs. We have a little bit of a different economy here. So I think Utah will have more protection than other parts of the country, which could struggle a lot more. Ashley, what do you have any thoughts on that?
I have been babysitting this like crazy. So I follow Barry Habib, which is kind of a big dog in my industry. He has a lot of knowledge, down to, he specifically told the feds to stop buying mortgage-backed securities, and they listened. It's crazy. So a lot of respect for him. And he called out Utah and a couple other states, Idaho is another one, that he still thinks values are going to increase. He thinks they will increase at a lesser pace, closer to the nationwide average of 4% versus the 9-ish that it's been at. But he does not anticipate a decrease. So he thinks Florida and Nevada, I can't remember all of them, but he went through almost all the states and kind of said better, worse, stayed the same. And Utah, he still thinks this is going to increase. There's still a huge demand. There's still jobs. A lot of the jobs here can work remote. A lot of us are still working remote. And that he thinks that the second the floodgates open and people are allowed to proceed with business as usual, we're going to see an uptick in business, which is going to drive the pricing up again. And that could be just in the short term. But in the next year, he thinks a 4% increase. And I trust that.
That's really helpful. Does he have a website or something that, or is it more of a level thing that people can look at?
No, I could share maybe some stuff. I have a subscription with that you have to be a loan officer and have a license to have access to. But I do have some links and things.
Why don't we just keep, because we're going to continue to do these probably on a weekly basis just to kind of keep people updated. So we'll just have you kind of bring those stats as you get them, or any updates you have. So if you share that with me, I'll be sharing that on our blogs, Facebook, LinkedIn, all those places. So please, feel free to reach out.
I was stressing when things shut down, and I'm not at all anymore. It's not as easy to close a loan on my end, but my team's amazing, and we're just, rolling with it and making things happen still. And it's just a different industry. It's just a little different now. That's all. You just adapt and we're good.
So
that we're in Utah.
Yeah. You talked a little bit about, obviously there's a lot of things that have come out. Mortgage forbearance is one thing people have talked about, that you don't have to pay your mortgages right now. Right? I know you talked a little bit about that. That's something that I feel like has been thrown about, but that's not actually the case. And if you are in a situation, because some people are going to be in a situation where they aren't going to be able to pay their mortgages, what recommendations do you have? What can they do? What can those people do?
Okay, so I would avoid forbearance or loan modification as a last resort. Last resort. I would try to talk about extending or moving a car payment, a credit card payment. So I would talk to creditors first and see if you can get some extra money to make your mortgage payment. A forbearance is just basically digging a hole. So what they're going to do is they're going to take the payment that you owe in April and they're going to make it due in August, along with April, May, and June. So all of those payments are now going to be due at once. That's going to be harder. Your mortgage is most likely your biggest expense. So protect yourself and try and pay that first. Nothing's for free, unfortunately. You're not being, those payments aren't forgiven, they're just moved. So I would rather have somebody move their car payment. And what I've had clients do, they call me, thank you for calling me. I've trained them well, but they're taking their car payment, which may be $400, and that's being put on the back end of a 5-year loan, which gives more time to catch up. And pushing it down 5 years is going to be enough time for you to be back at your job, get more money, things like that. instead of a mortgage loan, which is only going to do maybe 3 to 6 months. That's not quite enough time to recover. Some credit card places are either fully forgiving 1 month or flipping it to the end or pushing it down a little bit. And those are better options. Borrow from family. I mean, I would just try and do what you can to avoid it. Now, if you absolutely have to go the route of a forbearance, you need to call your servicer. It's not automatically approved. You can't just like, I skipped a payment because COVID. That will hit your credit and you will destroy your future. You is going to be mad at you when you can't get lending. So you call the servicer and you grin and bear it because you're going to be on hold for a minute, but it's going to be worth it. And you talk to somebody in person. You tell them the situation, and then they will provide documentation that you have to agree to. And it's going to break down that your payments due, when it's due, how long the loan is pushed out, how long the loan payments are pushed out, that type of thing. And until you have that in writing, don't.
And make sure also that that this will not affect your credit, and that it's not going to be due in a balloon payment or a lump sum payment. So
Which is what it will be.
Which it can be. I know there are some that can be put on the end of the loan, but I also know there's a lot of stipulations. And with Fannie, and it has to be almost a Fannie or Freddie loan, right, in order to do this. So you can call Ashley as a resource if you want to talk through any scenarios. One thing that we've actually done with our home, just because of the interest rates, but we're doing a refinance on our house. I know that,
that's awesome idea. Yeah,
so that's something that you can do, because what that can do is actually push out your payment for a month and a half or so. You can also potentially tap into lines of credit on your home. And this is all stuff that you have to think about rather than going into foreclosure or skipping a payment. Let's look at like all of your options, because you might have equity in your house, and that's something we could maybe tap into to help you get through the next few months until you're back working full time and have that income coming in again. Of course, there's a lot of government programs too, as far as unemployment has increased. We're supposed to be getting a $1,200 check. I heard they're coming in the mail next week. I'm not 100% sure about that, but there are some things that are available right now to help. But definitely, please let people this is not everything's on hold. People understand that it's stressful, this craziness, so we can just stop paying everything. It's just not the case. Even with the rent forbearance, like Utah has said you can't do evictions until May 1st, but you're still gonna have to pay all of that rent. So my suggestion, if you're struggling paying your rent, would be to contact your landlord and see if you can work something out up front, because that is gonna go a lot longer, give you a lot more flexibility, and they're willing to work with you more if you actually talk to them up front, give them your situation, and work something out on the front end, rather than just skipping out and not paying. Because on May 1st, they could then start the eviction process, which is not anything anybody wants. So what other questions do you guys have right now? Todd, is there anything that you can think of?
No, I think that covers a good portion of it.
Okay. Well, please know that we're here as resources for you. My job right now is to just help people understand what their options are. I do think that it is a great time to still buy and sell homes. And there could be opportunity coming up for people that are looking to get in the market. But I feel fairly confident that we're not going to see any crazy 20% drop off point like we did in 2008. And one thing I do want to just note about 2008 versus what's happening now, the market downturn in 2008 was actually caused because of housing. It was the housing crisis. What was happening at that time is lending standards were basically non-existent, and people were getting loans. Like, I could walk into a bank with no job and get a loan for $1 million. They would put me into some sort of payment, and then I would get maybe for 6 months, a year, and then they would put a balloon in or something that would cause me not be able to continue to afford it. So there were all these empty houses that went into foreclosure because people simply couldn't afford them and couldn't afford the payments. So that is not happening now. Lending standards are still pretty tight. All the people that we work with, they are qualified to get into a home. And so we're definitely not in the same situation. It is a completely different scenario than what we were looking at back then. Although I'm sure everybody feels a little bit of that trauma from just having gone through and recovered from 2008. And even the thought of going back into a recession or having all these struggles again is really stressful, and I can understand why people would be nervous right now.
Lending is nothing like, oh wait, you're going to be just fine. They're making guidelines even more strict to protect people in this time and make sure they're truly going to be okay and not foreclose on their homes.
Which is awesome. So, well, we didn't have to go a full hour, good. But I'm super glad you guys were able to attend. Please feel free to reach out if you have questions, and know that we're here to help any way we can. We're going to post this online so people can come back and reference it if you want to send it to anyone you know, and we'll also let you know about any future calls that we're going to be having, and then we're going to try to do this, I'm hoping, about once a week, just to keep people updated and keep, there's a lot of misinformation, so we just want to avoid that. So thank you guys for attending, and call me, reach out anytime if you have questions. Okay, see you guys.
Bye.
Bye.